Hey guys, it's Ken. So a lot of you have asked a lot of questions about 2020 and 2021. And so what I'm going to try to do here is talk to you guys about where I see as the top markets for 2021, because it's easy to go back and take a look and even have conversation over everything that's happened last year. And you really need to do that. But at the end of the day, you also need to try to see what's going to happen next. So that's what we're going to talk about now, are where the top markets are going to be for real estate in 2021. For those of you who don't know, you don't have to write anything down, you don't have to remember anything. Just click on the links, you go straight to the show notes, and we'll direct you to all the stuff so you can go look at it yourself. So every single time that I'm looking at a market, I'm looking at two things. I'm looking at supply and demand, and those can be very different based on the individual market. So let's go back to the very basics, Economics 101, so we can kind of take a look at supply and demand and how it relates to where you should be next in 2021. So here's a very basic graph of supply and demand for real estate. And hopefully you all know that the prices are high when the quantity is less. And so that's what we're seeing right now, and this has been talked about a lot. And if you don't know, part of the reason why single-family homes are zooming up in price right now is specifically because the quantities are low. So the MLS, or the Multiple Listing Service, has had record lows of all times for listings. And there's multiple reasons, and we've talked a lot about this, but mostly people are just very uncertain. They don't know if they have jobs, they don't know where they want to go, they don't know how long this pandemic's going to last. So there's all kinds of reasons why listings are low. And as I've told you guys, I believe that listings are going to be a lot higher in 2021. So if that happens, the quantity is going to go up and the price is going to go down. It's really that simple. So this is just a basic supply and demand chart. You just need to keep that in mind as you're continuing to look at a state, a city, a submarket, whatever it might be. So just saying that you're going to invest in Texas, as an example, doesn't necessarily mean that it's going to end up well for you, because you have to drill down into the individual city. There are good areas of the city, bad areas of the city, submarkets that are booming and other submarkets that are not, based on all kinds of things that are happening in each one of those markets. So the supply and demand, while looked at nationally, is very easy to do, and we're going to do that next. But as you guys start to invest your money or other people's hard-earned money, you really need to make sure that you're drilling down into these kinds of things. And there's lots of different things that drive demand and lots of different things that drive supply, and we're going to get into that in a minute. So there's a couple things that I want you to always remember. Supply always comes on the heels of demand. So what does that mean? What that means is, in my years of investing in real estate, when there's scarcity or there's a lot of people moving to an area, that means that the demand's high and prices are high. Does it mean that it always is going to be high? No. But what it does mean is that lenders and investors and all of those folks that are looking at that market, they all think that it might trend up for multiple years. And that's what I mean by supply always comes on the heels of demand. So in an area that has high demand, that's when a lender gets more comfortable on giving you money to buy houses, giving you money to build apartments, giving you money to build single-family homes. That's what that means. Lenders are looking at things like that. They're looking at, is this area high in demand? It could be for multiple reasons. When I used to live in Las Vegas, the casinos were going crazy and they were hiring all kinds of people, and Vegas was booming. And so we had high demand. And so the lenders were building apartments and single-family housing and retail and all that stuff. And Vegas was growing like crazy during that time. Of course, it's not growing right now for a very different reason. But that's what we're talking about with supply and demand. So with the housing, as you can see from this cartoon here, this obviously means that this house has been for sale for some time. We're not seeing that either. One thing that we are seeing is we're definitely seeing areas where people are migrating out of, and we're definitely seeing areas where people are migrating into, and we're going to get into that now. As you guys know, there's lots and lots of reasons, but I've summarized 4 here that I think are impactful right now. If you go on the internet and look, and you'll understand why. The first one is obviously warmer weather states. And if you look at the numbers I'm going to show you in a little bit, you're going to see areas like Arizona and Florida are topping the list right now. The second one is people are looking for affordable housing. Now that could be in the form of rent, or it can be also in the form of a mortgage, where they go and buy something. So all of that is happening now, and a lot of this is happening around uncertainty. The lower tax states, I think this is going to be a big thing, guys. A lot of times people just dealt with it. So California, as you'll see, has a net outward migration, first time in a long, long time. And this is primarily because of this, but certainly other government policies as well. But lower tax states are going to be something that a lot of people look at, even on the commercial side. I think you're going to see this is going to continue to be a thing. The last one, of course, is telework. People are able to work from wherever they want. What you might find interesting is that the majority, over 70% of the people that are moving around right now are moving actually within their own state. So they're not even moving out of state. So some of the numbers that I'm going to go into next are state to state. But really, the real movement is inside of a lot of these states. Up to 72% of the people are moving within their own state. So let me give you an example. Let's say you work in downtown San Francisco and your rent's $4,000, or you live in a home that's $4 or $5 million, which is almost every house in San Francisco. And now your employer says, hey, you don't need to come to work here anymore. You can now telework. So all of a sudden you're like, hey, I can go buy a similar home, not even an hour away, for half the price. I can go rent for half the price an hour away. So they're not necessarily moving out of California as an example, but they're moving away from these high-priced city centers, because what's left there right now? It's very dense, and so a lot of people are afraid around that. A lot of the businesses in some of these downtown areas are also not doing very well, or are closed at the moment. So obviously these are just some of the reasons, but let's get into more of the data. And I'm sure you guys have a ton more reasons that I'm not going to cover here, and we can go on and on and on around this. But the point is, whether you're a student, whether you're a teacher, whether you're a service worker, it doesn't really matter. A lot of people are migrating and moving around, either in-state or out of state. So now let's get into the real data. And this is the kind of data that I look at on a deal-to-deal basis as we're investing our money or we're investing some of our investors' money. So the first thing that I want to do, and I've talked a lot about, are some of these moving companies. And so we're going to highlight those right now. So the first one that I pulled up was just United Van Lines, okay? So that's just one company. So it's also important for you to know that this is just one company. You've got North American, you've got Atlas, you've got U-Haul, you've got United, you've got Ryder Truck. So you have all these different companies that are actually having their moving trucks move from point A to point B. Now, that's a data point. That's something that's very important for you guys to watch. But what we found through United Van Lines is that obviously people are moving out of New York and out of California to cheaper states. Just like we talked about, they're looking for affordability. Some of the other things that they're looking for are taxes, lower costs, bigger living areas, and a better quality of life, just like we just discussed. So that's happening. It's super clear. This is already in progress. So what's interesting is for the second straight year, this is pre-COVID, Idaho experienced the most inbound moves, while New Jersey saw the most outbound moves. So what does that mean? That means that according to United Van Lines, when they had trucks going in or trucks going out, this is the net migration patterns of the United Van Lines data. What I want you to do, and what I'm encouraging you to do, is to go into these websites and start to take a look at this information yourself, because every single company is just a little bit different, and we're going to go into that in a minute. But for United Van Lines, the top 10 inbound moves were South Carolina, Oregon, South Dakota, and Arizona, all with inbound migration percentages higher than 60%. Tennessee, Alabama, and Arkansas appeared at the top 10 for inbound migration after falling lower in the rankings in 2019. And that's also cool because you can go back and look at 2019, 2018, 2017. It's all on these individual companies' websites, and you can kind of get a pattern of what's happening right now. And by the way, a lot of these reasons, the weather, affordability, taxes, they were reasons pre-COVID too. So what happened, as I always said before, COVID in a lot of ways just accelerated what was already in motion, which is exactly what this spokesperson said. We're seeing that COVID-19 has without a doubt accelerated broader moving trends, including retirement driving top inbound regions as the baby boomer generation continues to reach that next phase of life. This is a real estate play, guys. As these people move to an area, it puts all kinds of pressure on things like housing prices. It could also work in the opposite direction. So be very, very careful that you're investing in buying in areas that are trending upwards and that you're not investing in areas that are trending downwards. As I like to say, be careful. You don't want to catch a falling knife. So in conclusion, according to United Van Lines, Americans are moving west and south in 2020. So now let's look at one more company, North American Van Lines, and they have just slightly different data. So what I've done for you, and this is a request that I got through prior videos, so keep these coming, is I've actually listed on the next slide websites for migration patterns so you can go check all this stuff out yourself. But what I wanted you to see, according to www.northamerican.com migration map, obviously the stuff that's red is outbound and the stuff that is blue is inbound. So it gives you a nice little graphic here of the 2020 U.S. migration report. It also talks about here the top inbound states and the top outbound states. So according to North American Moving Services, Idaho's first, Arizona, South Carolina, Tennessee, North Carolina. Notice how they're just different barely from United because they're a different company. The top outbound states, Illinois, New York, California, New Jersey, and Maryland. Also because it's a different company than United. So what's interesting, guys, is in some of your comments, I noticed that you were saying, why is Texas outbound state? In some reports, it is. In other reports, it's not. And so, like I said, you need to go take a look at these. One thing to really pay attention to, everybody's picking on California right now, and rightly so, with all the regulations, the pending wealth tax, the property tax, and all the stuff that's happening there, people are moving. But one of the cities that's actually making progress during all this is Santa Barbara, California. People are moving there. So when you look at a state, it doesn't necessarily mean that the whole state, it means there's the net. So some people are moving out of cities and other people are moving into cities. So be careful not to just write off the whole state. As you guys look forward, you need to drill down deeper into these individual cities. So now this is a gift to give to you guys about exactly the data that I go look for, and I'm giving it to you now. These are the websites that I go to for migration patterns. Okay, we already went over NorthAmerican.com. A lot of you have talked about U-Haul.com, and I brought up U-Haul before. AtlasVanLines.com, UnitedVanLines.com, MyMove.com, PewResearch.org, and PWC, which is PricewaterhouseCoopers.com. And I'm going to talk about all of these. What was interesting, as I was going through all these different reports, as I do, as we invest ourselves, I found that the North American had Idaho as number one, U-Haul had Tennessee, Atlas Van Lines had Idaho, United had Idaho, and MyMove had Texas. Now, let me show you MyMove, which is here, which I thought was really an interesting chart. These are the cities that gained and lost the most movers during coronavirus. So as you can see, you got Katy, Texas, which I have a property in, Richmond, Frisco, I have a property in, East Hampton, New York, Georgetown, Leander, Texas, Cypress, Texas. I don't even know where those are. But here's Idaho, Meridian, Idaho, which is right near Boise. Okay? And the ones that are out are Fort Myers, Florida, Philadelphia, Houston, Washington, D.C. Houston is also in Texas. And I think on that one report that I was looking at, you can see that Houston actually had a lot of people move out. Okay, so as you start to look at these patterns, the state might not necessarily be good, but the cities still might be good. Like Katy, Texas is where a lot of the oil companies are based. That's actually where a lot of the headquarters are based. It's still obviously growing, and it's actually even more affordable, and it's actually a bedroom community of Houston itself. But all the way down here, New York, Brooklyn, Chicago, San Francisco, LA, Naples, Florida, Washington, D.C., Houston, Texas. So no surprise there, guys. So this is also another independent report. The one thing I want you to see here, which is really interesting, was look how much further New York is than everybody else. So obviously, New York's really taking a beating right now. I don't know how much further, and this is Brooklyn too, the second one. So this is New York, New York, this is Brooklyn. We don't know how much further this is gonna go, but that's what we're gonna talk about next. As you guys start to look for this, all this individual information, my suggestion is that you look at all these different things and you start to make decisions based on what you wanna do next. Because some of this stuff is conflicting. Not that it's wrong, because it's actual data from the company. It's just different. Each one's different. It's not all consolidated. And it doesn't even matter if it is, because that's not what you want. What you want is to drill down from the state into the individual city level and start to take a look at real estate at a very local level, which is how it operates and functions. So obviously, as I'm looking at all this data and I'm meeting with my partner, I'm meeting with our investors, I'm meeting with our acquisition guy, and we're flying around, and my acquisition guy's flying all over the country trying to figure out where to buy next, we're looking at all the same data that's available to you. But the most important thing, of course, is what's gonna happen this year in 2021. And this might surprise you. So there's a study that just recently came out from a self-storage company. They believe that over 20% more Americans plan to move in 2021 than were in 2020. So everyone's freaking out right now about all the stuff happening in 2020. This does not surprise me at all, guys, because as you guys know, I've been talking about the forbearance and these eviction moratoriums, and all this stuff's gonna come to a head in 2021. As the dust settles, we're definitely gonna see more people moving. We're going to see people that owe money on their home, and they're going to scoop the equity that they have to pay that off. We're going to see people that can't afford to live where they're going to live, and they're in a lease right now. Once all this vaccine's rolled out and once things start to calm down, hopefully, we're going to see a lot more movement in 2021, and I even believe in 2022. So according to this report, I've summarized them here for you so you guys can see all this here. Over 20% more people are planning to move in 2021 than moved in 2020. The majority of these movers aren't relocating due to safety concerns like they were in 2020, and this is obviously a lot lower than we would have expected. While 18% of the respondents who plan to move in 2021 are able to do so as a result of job flexibility brought on the 2029 coronavirus, most are ultimately doing so to lower their cost of living. This is exactly what we're talking about here, guys, and I think you're going to see that even more now. Another point is that more living space is being a key deciding factor on why people are moving. And about 40% of these people are relocating from larger cities to smaller cities, which we already knew, of course, and is shown by the data. This is also the reason that home ownership was on the rise, because again, like the example in San Francisco, people can move from an area where maybe they were paying $4,000 a month in rent, and now they're able to buy a home somewhere and pay $2,000 or $3,000 in a mortgage instead. One really cool note is that over 70% of the respondents said they're excited to meet or get to know their new neighbors, and they want to get more involved in community things and volunteer things, and I think that we're all missing that right now, especially after this lockdown. And obviously in 2021, we still don't know when all that's going to end. So this is actually very encouraging as well. So now I'm going to confuse you even more. So I'm going to go into this report that I look at, and I'm going to give it to you guys, and I think that you're going to really, really like this. This is Pricewaterhouse, PWC.com. It's one of the website addresses I gave you earlier. But in this report, which is a huge report, it has a tremendous amount of data for all you analytics out there. You can go really deep on this stuff. These guys are incredible in my opinion. And so just to throw you off, their data says North Carolina, Texas, Tennessee, Texas, North Carolina, Florida, Utah, North Virginia, and New York, and Massachusetts. Those are the top 10 real estate markets that they have for 2021. This is an incredible report. This has a lot of data around a lot of things. You're going to find multifamily in here. You're going to find retail in here. You're going to find commercial in here. And all you got to do is go onto their website at pwc.com, type in real assets and emerging trends in real estate. They also have the data going back to 2015, as you can see. These are the top 10 overall real estate prospects for 2021 moving forward on a whole different set of demographics that are included in here. So on the first part of this video, you got to see where the trucks were going. This gets into a lot more detail. It talks about incomes and affordability and walkability and all these different things that are included in here and why they believe that these are going to be the markets for 2021. So is it all confusing? Absolutely. But you need all this data, guys, in order to invest your money well. It can't be from a gut feel, and it can't be based on what happened last year. What happened last year is important, obviously, and that's going to drive a lot of decision making on lending and investing and things like that. But really, you want to try to stay ahead of this. This report is not the end-all be-all, but it does go into a lot of detail for you so you can dig into it yourself and you can hopefully make some really, really good decisions into 2021, and you can make some really good decisions on where to invest your money in real estate in 2021. Hey guys, if you like this information, please hit subscribe. There's a ton of work that goes into this stuff. And if you want to be notified, just hit the notification bell. It'll come straight to you and you'll know exactly as we produce these, and you'll get them timely way before a lot of people see them.